Hi friends, two recent news about OYO Hotels make me think that is OYO Hotels going to be the big turnaround story of 2025? First news was that OYO Hotel is changing its policy and unmarried couples will no longer be allowed in Meerut in UP. And this policy may get extended depending on how it goes for OYO Hotels. The second news was that a bunch of celebrities including Madhuri Dixit, Gauri Khan, etc. seem to have invested in OYO Hotel much before its IPO, which is already on the radar to come out in the near future. Does it mean that OYO is transforming its business before it hits IPO? In this video, I will bring you lot of data-backed and totally unbiased insights about OYO's transformational story. Let me set the scene with 5 shocking facts about OYO's business that you may not know. Number 1 is OYO's 77% of revenues comes from outside India as of FY24. So India is a tiny business for OYO. Number 2 is after making losses for almost 12 years in FY24, OYO has first time declared profit after tax of 229 crores. So OYO is now a profitable company and has delivered 10 consecutive quarters of EBITDA profitability. Number 3. OYO has gone through 21 funding rounds so far, and in their latest funding rounds in August 2024, prominent investor like Ashish Kacholia invested in OYO and he invested 76 crores in OYO. Number 4, it is not Ritesh Agarwal who owns the majority stake in OYO. It is indeed SoftBank, a reputed foreign investor who owns 45% stake in OYO. Number 5. OYO so far has acquired 10 companies around the world and Motel 6 and Studio 6 is the latest acquisitions costing around 525 million US dollars. So how is it that OYO from almost bankruptcy to mass layoffs to litigations to now has turned around and has become a profitable company? In the next few minutes, I will tell you fascinating story of how OYO has turned around its business, and there are still few risks that I want to talk about. A lot of these insights about OYO I found on IncredMoney platform, a wonderful platform for investing in unlisted companies like OYO, Chennai Super Kings, Cochin International Airport, and so on. Until now, investing in unlisted companies was a privilege for large institutional investors, VCs, PE firms, etc. But IncredMoney is changing this and making unlisted companies available for retail public like you and me. The process is 100% online and very simple. Simply go to IncredMoney platform and create your account. Complete your KYC and link your Demat account, and you are ready to invest in unlisted companies of your choice. You can invest and buy as low as 1 share of unlisted company of your choice. And as per the settlement period of that unlisted stock, your unlisted stocks will come automatically to your Demat account. And the best part is that there are no commission fees or there are no brokerage charges as of now. In fact, you will get a discount of 0.50% on your first transaction if you use my code. You'll find the link in the description or in the pinned comments. Coming back to OYO Hotels, Ritesh Agarwal, a college dropout, youngest shark on the Shark Tank, a boy from Odisha at the tender age of 19 started OYO, which meant on your own. In 2020 or 21, if you had asked me, Rahul, will OYO survive? I would have said no chance, absolutely no chance. OYO has no chances to survive. Why? Because a lot of problems they faced from 2016 to 2020-21. For example, in 2016, when the business was about to take off, almost 200 hotels cancelled their contracts with OYO. Situation started to get worse, and in fact, in 2019, few hotel partners actually fired cases against Ritesh Agarwal, cheating cases against Ritesh Agarwal. Their key concern was that OYO is not paying on time and OYO is cancelling the contracts before the lock-in that is there in the agreements. At the same time, there was mass layoffs by OYO done in 2019. Around 2,000 people were let go by OYO at that time. And when a company does mass layoff, you and me will think exactly like that. Is the company coming down? Things got even worse when COVID hit the world. Around 60 to 70% of the bookings all of a sudden got cancelled in China. And in fact, OYO China was on the brink of collapse. The same situation unfolded in Japan as well. OYO Japan was struggling big time. To be honest, at that time, OYO was not alone. 40% hotels permanently got shut down in 2020 because of COVID. The internet was full of OYO is about to fail, OYO is coming down. In fact, OYO was linked to the modern India's startup system. OYO's situation was diminishing day by day, so much so that OYO had to vacate its headquartered in Gurgaon, two of the premises, because it was not able to pay for it. This was not it. Federation of Hotel and Restaurants Association of India, they filed a FIR against Ritesh Agarwal and OYO. As a result of all of this, in FY20, OYO ended up making more than 13,000 crores of losses, and in FY21, almost 3,800 crores of net losses. OYO's financial situation was so bad and they had to raise debt of around $660 million at that time. In 2021, OYO decided to file its IPO, and guess what? Even the IPO was opposed by FHRAI. So it's been quite a roller coaster ride for OYO until 2021. And if at that time you ask me, Rahul, what is the chances for OYO to survive? I would have said no chance, absolutely no chance for OYO to survive. But here we are in 2025, OYO has survived. Not only OYO has survived, it has given 229 crores of net profit after tax in FY24, and it has now become a profitable company. So how is this turnaround possible in just a matter of 3 to 4 years of time? When I was looking at their data, I found 4 key reasons. Reason number 1 is in FY21, OYO made a complete change in their business model. Prior to FY21, with their hotel partners, OYO used to give them fixed commitment for payouts. So just imagine a hotel XYZ that is part of the OYO network, and they had given 100 rooms, and if out of those 100 rooms, all 100 rooms go vacant, OYO still used to pay them. But from FY21, OYO totally stopped that business model and they made changes in their contracts. And as a result, slowly their costs started to come down, and as you can see, their gross profit margin started to go up from 7% in FY21 to almost 23% in FY24. Second big change OYO implemented was that they started exiting loss-making businesses and loss-making hotels. For example, back in 2019, OYO became China's #1 hotel chain, but China's operations were all unprofitable. They were loss-making. Therefore, OYO decided to steer away from China completely, and they started to focus on their core markets. Secondly, they started cutting down those hotels that were giving poor customer experience. So for example, between 2022 and 2023, their hotel numbers started to come down from 18,000 to 12.9. They took a pause, they thought about their strategy and only started to add those hotels that they were confident that the customers will get good experience, and that's why after 1 year, they started to add back around 5,000 hotels in their network. Also, they started adding vacation homes into their network because vacation home is a very fast growing sector. It is growing at almost 13.97% CAGR and is likely to hit almost $317 billion by 2030. So OYO is now focusing on vacation home sector more than just hotels. Number 3, cost reduction. OYO is operating in more than 35 plus countries, and just imagine running 35 different manual processes in 35 different countries. So OYO started to think about reducing the cost, and therefore they started centralizing these processes and started opening global shared services model and started using technology rather than manual processes. As a result of that, their employee costs were down by almost 88%. Their general and administrative expenses were also down by almost 91%. Marketing and promotion expenses were also down by almost 63%. So all in all, a lot of cost reduction is what we saw in FY20. Fourth is managing the debt efficiently. In FY24, company paid back around $195 million of debt. And this repayment of debt is likely to save the company now $27 million of cost in their P&L from an interest perspective. Now, mind you, they still have a lot of debt. Around gross debt is still $449 million. What are they doing about it? They are trying to get it refinanced. So it was in the news that Deutsche Bank is likely to refinance OYO's these long-term loans. And why are they trying to get it refinanced? Because they are trying to get it at a lower interest rate. So for example, if you have your home loan at 10% interest rate and next year you go and get it refinanced at 8% interest rate, your EMIs are going to get reduced, and that is what precisely OYO is trying to do here by doing the refinancing of their debt. So if you look at OYO between FY12 to FY20, we can say that it was in the startup mode. The processes were not matured. There was a lot of hasty and bad decisions made. They were growing at a rate that they were not able to support. But between FY21 and 24, they seem to be now coming out of that startup mode and they started to sort of adopt a matured thinking in their processes. Having said this, I still feel that there are two big challenges ahead of OYO. Number 1 is OYO's IPO. If you look at the history, in the last 3 years, they have applied for IPO twice and they have withdrawn it. So this hokey cokey that OYO has done with IPO is not good for their business at all. If they attempt third time for IPO, they better make it really work. Otherwise, the investors are likely to lose confidence in OYO, in my view. So the management really need to think through what is their IPO strategy. Why do they want to bring IPO? And if they want to bring IPO, they really need to make a clear plan of IPO. Otherwise, investors are going to lose confidence in OYO's ability, in my view. Secondly, customer service. I still feel at some level that OYO's customer service needs to improve. For example, in India, their customer rating has been going up from 4 to 4.5. But please remember, 77% of their business comes from outside India. And that is where they need to really focus. For example, I was looking at some data here. Denmark, their rating is only 3.0. Look at Netherlands, their rating is only 4.0. If OYO want to become a global brand, their ratings at global level needs to improve. They need to get to closer to 4.6, 4.7, 4.8, and that is when I can call OYO a complete turnaround story. I think right now there are very, very good signs, but there is still a lot of work to be done by OYO team, in my humble view. What is your view on OYO's future? Do you think OYO is going to become #1 global brand across the world, given the scale and things that we've discussed in this video? Let me know in the comments your view about OYO. And in this video, I hope you have got a lot of insights about OYO's business. Also, if you want to invest in unlisted companies, do check out IncredMoney platform. It is a wonderful platform to invest in unlisted companies. You will find the link in the description or in the pinned comments. I hope you enjoyed this video. If you did, hit the like button. Let me know in the comments a simple thank you so that I can come up with more content for you at zero cost. With that, I hope to see you in my next video. Until then, keep rocking.